SARS is now sharing information regarding your financial footprint, your assets abroad, with over 100 countries. So slowly but surely, they are upping their game with identifying those South African expats that have gone abroad and not formally ceased tax residency.
I know in line with that, SARS is making use of a lot of AI and automation to assist. And quite correct, I can't remember the exact number, but it's around 129 countries. That is, I mean, that's pretty much most of the countries that anyone would want to visit or want to reside in. So again, to reiterate, the era of not ceasing your tax residency or in the sand approach is definitely over. A very warm welcome to all of our listeners. For those who are new, hopefully you find this interesting and subscribe. Those who are not new, very good to see you again. I'm sure you may recognize me. I'm John Paul. We operate at Tax Consulting and we head up our expatriate tax and cross-border tax division. Today, something very exciting. You'll notice a new face. I've got sitting next to me Vivian Cox, an expatriate tax consultant here at Tax Consulting South Africa. And today we're going to be talking about a topic that we wrote on that you found very, I would say, close to your heart in terms of dealing with clients. And the title I really enjoyed. I mean, mentioning a silent exit from South Africa. And I think that's a common misconception that a lot of people have and a lot of people that we deal with in consultation. So I think as a starting point, again, good to have you. And secondly, maybe just give us a bit of background as to why this topic highlighted in your eyes and the title.
Found the title Silent Exit extremely fitting, just because there's a lot of clients that have moved abroad that, there's some hesitancy regarding financial immigration and just seizing residency in a whole. And if it applies to them, is it something that, they should apply for? I know there's also a lot of clients that have, gone abroad that haven't even reached out for any assistance, and they may have gotten away with it for a couple of years. But SARS is slowly but surely closing the gap in identifying those expatriates that have gone abroad, that have not yet done anything regarding their tax residency. So I just found the title extremely, relatable to everyone who's gone abroad. And immigrating in a whole is, it's a big thing. And it's not that people do it intentionally. If you immigrate into a different country, I feel like you kind of forget about the taxing obligation side of things, but it is an important step to take to ensure that you are compliant and that your foreign income is protected.
Yeah, so I think very, very, very well summarized. And I mean, I see it a lot as well. Individuals didn't know either they needed to do it, or there are some of those who know they need to do it, but just are not doing it. So I think as an executive summary, before we go into some of the questions, if they have not followed the process of formally ceasing their tax residency with SARS after having moved abroad, is it going to be, let's say, acceptable, but also is it still safe to not inform SARS going forward?
Whether you've intentionally chosen to not inform SARS or you've unintentionally just at the back of the mind completely forgot to inform SARS, it is not safe at all, because the era of not informing SARS and just letting it go is past.
I like what you said there. I think going into a new era of tax declaration, if I could say. I know that's a very important change that came about, or implementation, if I could say, came about in February. So I know it's covered in the article, and I think this ties directly in with, amongst other changes, of why it's no longer acceptable or safe to put your head in the sand approach, we actually call it, when it comes to your tax residency. So maybe you can just elaborate for the audience in terms of what that change was.
Yeah, so on the 16th of February this year, 2026, the automatic exchange of information was finalized. That document was finalized, meaning that SARS is now sharing information regarding your financial footprint, your assets abroad, with over 100 countries. So slowly but surely, they are upping their game with identifying those South African expats that have gone abroad and not formally ceased tax residency.
I know in line with that, SARS is making use of a lot of AI and automation to assist. And quite correct, I can't remember the exact number, but it's around 129 countries. That is, I mean, that's pretty much most of the countries that anyone would want to visit or want to reside in. So again, to reiterate, the era of not ceasing your tax residency or in the sand approach is definitely over.
Yeah.
Actually, the other day I got a mail from an old client who their sister-in-law or something along those lines actually received an email from SARS saying that they owe outstanding amounts, and they've been abroad for 7, 8 years, you know.
Yeah.
So definitely the system is catching up with the taxpayer, if I could say.
Mm.
But I think there are obviously a lot of reasons or justifications maybe that taxpayers may have in their minds as to why they have not done this or why they will not do this.
Yeah.
So I think one being an exit tax. So maybe if you could just explain to us as to how an exit tax works, and then also maybe, well, after that, I'll just ask a follow-up on backdating, how that can assist.
Yeah, not a problem. So, exit tax is a major concern when it comes to a lot of clients
Mm.
seeking tax residency. It can be quite expensive, but it only applies to certain assets. So, assets, just for an example, as foreign fixed property or crypto assets, those assets are taken into account for exit tax. Now, what this means is it's basically SARS saying that yes, we will seize your tax residency. However, from the time you've acquired these assets up until the day just before you formally seize tax residency, the growth on that will be taxed. And the only way to determine how much of a liability is due is through way of a tax calculation that
Correct.
needs to be done.
So again, I mean, a lot of people think, I think firstly that South African immovable property is included.
Mm.
Good news, it is not. It's only
Yeah.
foreign fixed immovable property. Another misconception is that you have to dispose of your assets. And I know that we can both confirm you actually don't have
Yeah.
to dispose of any of your assets. But I think now just where that is very overemphasized in terms of why someone shouldn't do it. I know something that we have at least specialized in and got the experience of doing, of backdating
Yes.
someone's non-tax residency.
Yes, I actually dealt with a client recently that left the country in 2016. She had shares in a company which were acquired in 2017, luckily. So, in cases like that, exit tax isn't applicable. However, what you described is where if you have left the country in 2005, for an
Mm.
example, however, in 2007, your shares in a company have skyrocketed in terms of growth and growth value, then backdating that application to 2005 can actually eliminate that major growth, making the exit tax that is applicable a lot less.
100%. And I think two big wins is where you have growth on these assets and you can
Yes.
actually backdate prior to that growth.
Yeah,
And then also a lot of people, as we've seen, when they do go abroad, start to earn a lot more money.
yeah.
And really start to accumulate their assets and investments and just their wealth in general.
Mm.
So backdating it to when you initially left South Africa often eliminates a lot of your exit tax. So that is a big one. And that's something that people, for those of you who have not done this, just bear that in mind. It is worth a consultation to at least see if that is what's causing hesitancy, if we can address or eliminate that
Yeah.
concern for you at least. So the reason or the method behind asking that question is what we note as well in the article. There's a lot of higher net worth individuals or high net worth individuals who have left or are leaving the country, and exit tax being one of their problems, you know, that they are trying to avoid. I know that you also looked at the numbers in terms of how many expats have left versus how many have formally ceased. So maybe you can just give a comment or two on the high net worth aspect and as well as the number that SARS has recorded in terms of leaving.
Yeah, not a problem. With a lot of South African expats, especially the high net worth individuals, um, they don't realize that the higher the wealth, the more scrutiny you are facing at SARS, or the more scrutiny you will face at SARS. And once SARS identifies that you have been abroad, you haven't formally seized your residency, which automatically makes you a tax resident, taxable on your worldwide income, that scrutiny will be placed on you and all the wealth that you have, assets, everything. So it's important for high net wealth individuals as well to formally seize their tax residency statuses. In terms of the numbers, over the past decade, over 1 million South Africans have gone abroad. However, only 51,000 South Africans have actually formally seized their tax residency. So that shows that there is a major gap between the South African expats that move abroad and the South African expats that actually follow the process, whether it be intentional or whether it be just due to misinformation, people not thinking that it applies to them. It's always safer to reach out to a professional to rather obtain that information and see if it is applicable to you or not.
Completely agree. And again, I never try fearmonger, but in terms of penalties and those types of things in your Tax Administration Act, where there is intentional ongoing non-declaration or understatement of income and assets, there is up to a 200% penalty of the capital amount owed. So that is a
Yeah.
hefty fine to pay.
Yeah.
And that doesn't matter how wealthy you are, it definitely hits a pocket, you know?
No, of course.
So agree. Better to be safe than sorry.
Mm.
I think in maybe just wrapping up the highlights of the article, I do recommend everyone goes to read the article at least as well. But in terms of wrapping it up, I think maybe just touch on the process that is meant to be followed and how we assist you.
Not a problem. So typically, it is a formal process that needs to happen with SARS. There's a formal application that needs to be applied to SARS. They need to approve it. We look at things like your passport with your exit date stamp to prove to SARS when you left the country. This is important for backdating as well. Another document that is looked at a lot is the TRC or tax residency certificate. Now, this is obtained from the taxing authorities in the host country of which you are. These documents are extremely important in proving to SARS when you left the country and that you are paying tax in the country that you are currently residing.
100%. And I think, which most people would love to hear, is that we deal with SARS and correspond with SARS on your behalf. So
Yes.
please, by all means, do not let that be a deterrent. I do know how hard it is to deal with SARS, especially from abroad. So, firstly, thank you very much, Vivian, for joining. I think it's been a very informative and very, hopefully, relaxed, insightful, and many other things kind of podcast. So, if there are any questions, obviously there are means and ways to reach out to us.
Yeah.
But definitely, if you are falling into the category of who we are talking about today, definitely urge you to reach out. You don't have anything to lose. And the hardest thing is taking the first step. So from us here at Tax Consulting South Africa, appreciate you listening and joining in and looking forward to seeing you guys soon again. Thank you.